Is SoFi stock a buy right now? That's the question on most investors' mind. Despite the stock being up over 40% since April's low point, it feels like the stock has stuttered in recent weeks, only up 6% in the whole month of May. But in the past couple of days, SoFi has made some interesting announcements. SoFi has been listed as one of the smartest growth stocks to buy right now. And Tom Lee has just made some big calls for what he expects from stocks like SoFi. Could buying SoFi technology stock today set you up for life? Now we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? It takes a lot of time to make these videos, but it literally takes 2 seconds and costs nothing to smash the like button, and it helps the channel out so much. I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. And I would really appreciate it if you could try to answer the question later in this video. Now let's get into it. SoFi just announced that CFO Chris Lapointe will be participating in 2 upcoming investor conferences: the 45th Annual William Blair Growth Stock Conference and Mizuho's Technology Conference. The first of these will be in the coming week on June 4th, with the second one the following week on Tuesday, June 10th. Now, looking at what analysts think about SoFi, we can see that there are 16 Wall Street analysts that have given an average of 14.38 price target. We have 3 sell ratings, 5 hold ratings, 7 buy ratings, and 1 strong buy. But the last rating that we got from Mizuho was back in November 2024. At the time, they boosted their rating and set a price target of $16. But a lot has changed since November, and since then SoFi have delivered 2 absolutely massive earning beats. So it will be very interesting to see if Mizuho boost their price target again, and just by how much. And likewise with William Blair. Back in January 24th, they reiterated their outperform rating without a price target set, so it will be interesting to see if they give a price target after the conference. Looking at SoFi's latest figures, they recorded adjusted net revenue of $771, the fastest growth in the past 5 quarters and significantly above their previous guidance. Adjusted EBITDA of $210, net income of $71, and EPS of 6 cents. All significantly above guidance. So this is an incredible achievement and a sign of the direction that the company is going, which I will talk more about in just a moment. Now, on top of the financial metrics, SoFi's new member additions has grown to 10.9 million, an increase of 802,000 new members, which is the single best quarterly increase to date. New product additions has also grown to 15.91 million, an increase of 1.18 million, which again is the single best quarterly increase that SoFi has ever produced. These are signs that SoFi is becoming a juggernaut that is showing no signs of slowing down. Adjusted net revenue of 771 and adjusted EBITDA of 210 are again far above anything that we've seen in previous quarters. But there is a further breakdown of revenue here too. Adjusted net revenue for the tech platform and financial services for Q1 is 407 million. If this is annualized, without any quarter-over-quarter increases, which we are actually sure to have, then this would equate to 1.6 billion, which is far above last year's 1.2 billion. But fee-based revenue is increasing, coming in at 315 million for Q1. The adjusted EBITDA margin is improving each year, and while Q1 has recorded 27%, management are targeting 30%. Now, breaking this down even further, financial services has driven a 2x net revenue growth on the year, while nearly doubling contribution margin, revenue going from 151 up to 303, and the contribution margin going from 25% up to 49%. These are incredible figures. And now the big one. Lending originations. Again, for personal loans, this is a massive increase on Q1 2024, but the key one here is the loan platform business originations. This is over 1.5 billion in Q1 compared with 2.1 billion in the whole of 2024. If I remember correctly, this was about 1 billion or maybe 1.1 billion in Q4, so this is a massive increase. Since acquiring a bank license back in 2022, SoFi has grown deposits to $27 billion and is shifting towards more deposit funding, which has reduced the funding expense by an estimated $500 million per year. And we can see that clearly here. Now, adjusted net revenue has come in this quarter at 771, but management are guiding for between 785 and 805 next quarter. Adjusted EBITDA of between 200 and 210, and EPS guidance between 5 and 6 cents. While they have increased the full year EPS guidance up to 27 to 28 cents, which is only a small increase of about 1 cent. But what I will say about this is that this should be easily achievable. If anything, once again, SoFi are lowballing our expectations. Fundstrat Capital's Tom Lee has just expressed his opinion that smaller cap stocks like SoFi are the ones to watch right now, not the Mag 7 stocks like Google or Amazon. Just watch this for a moment.
Hey, Tom, you've been right. It's paid to buy the dip. Do you still feel that way when we get these sort of tariff back and forth headlines?
We still think dips are going to be pretty shallow. It's still the most hated V-shaped rally. I mean, the COVID rally was hated until we made new highs, and the rally from the fall of 2022 was hated until we made new highs. It's not any different this time. Hedge funds, I think, have really been very cautious. They were forced to sell near the lows, and we know there's $7 trillion cash. So while a lot of people are calling a top, I actually think that this is more of a mid-cycle kind of start of a new bull market.
Tom, are you more confident in the Mag 7 idea or the small cap idea?
Carl, it's an overused word, but I think it is a bit of a barbell. I mean, in the near term, the washed out groups we thought would be the beneficiary, and the Mag 7 was really leading that because so many of the Mag 7 peaked earlier and bottomed before the S&P did. And we still want to stick with that. But as I look at the second half, I think the small caps really have a strong case to be made, because as long as we move towards a tariff resolution or the markets feel that way, then I think investors can actually start putting flows back into stocks other than the Mag 7.
Ever since going public, there has been a huge disparity between SoFi's valuation and its amazing growth. Looking at this graph, we can see this clearly. The entire stock market dropped from 2021 all through 2022, as we know. Like when we talk about once in a decade bear markets, this was it. Throughout 2022, the S&P 500 dropped 25%. But the broader Nasdaq 100 index dropped about 35%. Now, everyone lost their minds earlier this year when the markets came crashing down after President Trump's tariff announcements. But the market drop, although significant, was about 23%, far less than a drop-off in 2022. But in all of this time, SoFi has been growing rapidly. Just look at the long-term disparity here. Since SoFi went public, revenue has increased nearly 400%. Gross profit has increased nearly 500% at a compound annual growth rate of over 51%, which is absolutely amazing growth. The company has turned the corner completely from loss-making growth stock and has become a profitable company that is expanding at its fastest rate ever. And yet the stock price is barely up a little over 5%. There is an ever-increasing disparity between the company's growth and its stock, and the stock price will eventually need to reflect this. But what's next for SoFi? And is SoFi stock a buy at $13? Well, here are 3 key reasons why. SoFi is currently trading at a price-to-sales ratio of 5.3. However, there are strong indicators suggesting that the valuation multiple could see further expansion. Firstly, the company's strategic shift towards higher margin revenue avenues through its technology platforms and financial services segments is attracting investor interest. Secondly, and I've been saying this constantly for over a year, SoFi's membership growth and successful cross-selling are proving to be essential. As the company continues to expand its membership and effectively cross-sells banking, investing, insurance, and other products within its integrated ecosystem, investors might attribute a premium to its valuation. Lastly, and most importantly, SoFi's trajectory towards consistent profitability could serve as a significant catalyst. Maintaining profitability and increased operational efficiency could lead to a vital inflection point, as financially successful companies in the sector typically command higher valuations. Now, while these factors strongly favor SoFi, there are also risks. As we know, SoFi stock previously declined over 80% during a significant market downturn, highlighting its vulnerability to macroeconomic challenges. With interest rates remaining high and ongoing trade tensions, there exists a risk of further decline in the stock price. Now, I think that this point is overblown a bit, because during the last significant market downturn, SoFi was not a profitable company. It was still in its early stages of growth, and it was still loss-making. Loss-making companies were the ones to have the biggest dips. So I think that SoFi is far less risky now than it was just 3 years ago. And on the note of interest rates remaining high, President Trump has once again stepped up the pressure on Jerome Powell to cut interest rates. During their first sit-down meeting since Trump returned to the White House in January. And Fed President Mary Daly has restated that modestly restrictive policy remains necessary. However, despite this, 2 Fed rate cuts are possible this year. But guys, what do you think? Let me know your thoughts in the comments below, and always do your own due diligence. Remember that I'm not a financial advisor, but if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on X, and I'll catch you in the next